Welcome to The Money Huddle, a podcast that explores financial topics for families and small business owners. Hosted by Michael Baker and Ross Marinell. All opinions expressed by Michael and Ross or any podcast guests are solely their own opinions and may not reflect the opinions of Planners Alliance. The podcast recording is for informational purposes only and should not be relied upon for investment decisions. Clients of Planners Alliance may maintain positions in securities discussed on the program.
Welcome back to the Money Huddle. My name is Michael Baker, and I'm here with Ross Marinell. Ross, how you doing today, buddy?
Michael, it's good to be here. How you doing today?
I'm awesome, man. Today is first day back to school, and so that's time stamping this recording. But today is the first day back to school here in South Carolina.
That's right.
So, a little sad at the house with knowing that the kids are headed out, but we're excited. They're in a great place.
That's the telltale sign that you have a young children.
Yes, exactly.
When you're not just thrilled that they're going back to school.
That's true. Yeah, no, it's true. It's like, just my little girl, she started first grade this year. You got a first grader, right?
Yeah, so yeah. Eliza's in first grade, and my oldest is in fourth this year. So
you know how it is. It's just like it's a little bittersweet because summertime is over, and now they're gonna come home with random homework stuff and reading assignments and all that.
It's kicking in. Well, I tell you what, we had I think an interesting way to discuss the topic today.
Yeah,
and so we wanted to talk a little bit about how sometimes the stock market or a stock's narrative really sort of drives people's talking points in the way that we think about them versus some of the underlying metrics of the business.
It's all about the story now.
It's all about the story now. And so listening to some of the political commentary and feedback that has come around here recently, we had a presidential hopeful, Mr. Joe Biden.
Don't undersell this because I know where you're going.
Said to a group of folks, now listen, we're not a political podcast, but this has to be discussed.
This is funny. I don't care who you are. I'm just going to say that.
We choose truth over facts.
Yeah.
And so this
truth
Michael,
over facts
is the truth over facts.
As we
podcast.
say in the South, bless his heart.
Bless his heart. And listen, we're not making any commentary politically, but it was something that really caught my attention and stuck with me because how often is it that we're looking at or discussing a market or individual company's merits and the truth just is stronger than the facts, meaning the narrative, the story that's driving the underlying trading,
the company's truth, their
company's truth.
It's stronger than their facts.
Stronger than their facts. And so today's the Truth Over Facts podcast. And so what better way it just fell right in our lap, right? That WeWork is now, pressing to go public very soon. They've had to file some disclosures with the SEC, and so they've published their S1, and it is littered with hilarity.
I mean, we said it before. This is the document where they tell you what's really happening. And in plain language, by the way, this is not a lot of attorney speak in these S1 filings.
Generally speaking, they're very straightforward,
right?
And anyone who is investing in stocks should read them for the companies that you're investing in,
right? And
the risks section, I am just a fan of. I'm sorry, it's just my nature. Maybe it's just what attracts me to it. I love reading the risks that they disclose.
Well, I think if you are going to be an investor, you need to know what risks you're taking, like what can happen, not just to your funds, but, specifically if you're going to target individual company stocks, you need to know like the business risks they have, do they have exposures to different things? This is one of the reasons why diversifying a portfolio can be so helpful in the long run, because you can diversify away some of these risks. But if you decide, hey, I'm going to own that company specifically, individually, well, then you need to know exactly what that company is getting themselves into.
I agree. I think if you understand their operation and business metrics, you can learn how they make revenue. You can learn what their big challenges are. Is it political risk? Is it funding risk? What are the challenges? Is it competition? And so it is really important to be able to read through some of these disclosures and understand, how you might approach this.
Right.
So, all right, just a couple quick. Can I just hit? All right. So, the old interview question, if you're being interviewed and somebody's just throwing a softball question out there, and it's like, if there was something you could change or improve about yourself, what would it be, Michael? This is the one where you always you could answer truthfully,
right?
Or you could be like, I just work too hard.
It's your opportunity to give a humble brag about yourself,
right?
Or give some false modesty.
If I just didn't work so hard and show up so early.
People just have always got on me about how hard I work and that I just, I always put the company first.
I just never want to go home.
Yeah.
So the first,
I'm always going the extra mile on the extra mile.
The first few paragraphs reminded me of that a little bit. It says so this is one of the headings. Our rapid growth may not be sustainable. Our historical growth rates may not be indicative of future growth. I just thought that was funny.
Yeah, our historical
the humble
growth
brag.
Rates.
But of course, then you have to get into the facts, right?
Sure.
Which kick in, and so they can try and craft the narrative in any way they want, but they have a history of losses, and especially if we continue to grow at an accelerated rate, we may be unable to achieve profitability at a company level. So again, we're growing, our revenues are expanding, and we do have rapid growth, but in fact, as they extend their growth, their revenue, they're actually extending their losses. So 2018 looks like lost $1.9 billion for the year. Yep, that was ending December 31st, 2018. So as revenue expands, the losses expand. That's a problem. But here is something, Michael, that really struck me as important, and we're starting to see this across a few different areas, which is WeWork has a problem with what we call mismatched durations.
Yes.
And what that means is they have short-term memberships, meaning they're renters, right? They don't call them renters, they're members. So they join the WeWork community, they become members. They have the ability, in most cases, to terminate rather quickly. And so they have the problem with that short-term revenue and that short-term commitment to revenue is that they match that with long-term leases on real estate.
I think Scott Galloway will talk about this a lot on his.
He had a beautiful takedown
on his Twitter page.
Priceless. If you are on Twitter, follow Scott Galloway.
Yeah, no doubt. I think he was railing on him pretty good. So it's exactly what you're talking about. I mean, so again, if you want to invest, and this is the thing that happens, sometimes I would say it's probably pretty common, and when you've experienced a prolonged bull market, where a lot of people start to be a little bit confident, perhaps overconfident, and they start to hear these stories, right? So these companies that spring up, and they're like, oh man, they're going to be phenomenal, and I want in on that action. And they don't read the S1. They hear the story and they see the hype, they see the company's truth, but they don't dig for the facts and realize they're not making a profit.
So this is how it reads in their S1. Substantially all of our leases with our landlords are for terms that are significantly longer than the terms of our membership agreements with our members.
Exactly.
The average length of the initial term of our U.S. leases is approximately 15 years.
15-year lease.
Wow.
Yeah.
So they're committing to long-term leases with major buildings.
Some of these are in got to be in A+ locations.
They have
in major
uptown
cities.
Charlotte location that you can see the sign on the building.
Yeah, the
from
names on the
BB&T
building.
Ballpark.
Yep.
I mean, we're talking prime real estate in most cases, long-term leases and short-term revenue. That's a challenge. Something else that is, I think, unique about some of these businesses that have sprung up here recently is that WeWork was formed in 2010. This company hasn't been through a recession yet. They just haven't experienced it. They just haven't been around long enough. And it's not to say that they can't survive that and grow and thrive through it. But there is some concerning aspect of what happens when we have some of these short-term companies that have members, right, that rent space from them that are, maybe they're freelancers. Maybe they're kind of sole proprietors. Maybe there's a potential that they could be affected during a next recession and they can't afford to be there, even if they wanted to continue the rental operation there. And I just think there's some It's something to be curious about.
Well, it's been interesting, because the last decade, all right, so 2019, 2009 was the bottom of the financial crisis, March 2009. A lot of these companies that are newer that were formed after that date, they all were formed in a very low or possibly zero interest rate environment where capital was so cheap to get funding, financing, companies borrowing money, leveraging it into startups because potential return is huge, right? And what we're seeing now is a lot of these companies, and I think WeWork falls into this category, where it's my personal opinion, that this is the chance for all of those early people, the seed capital, the early investors, to get out. And they're gonna dump all this stuff onto shareholders when these things go live. They're gonna have the opportunity to finally unwind some of their shares and deleverage their risk. Sure, they'll probably keep some for sure, but I think there's been a lot of stuff with this company specifically that's come up. This owner, I think we talked about it on the podcast where he, and I said here, I was like, well, why wouldn't you? If you were in his boat, why wouldn't you ring the register and cash out and get the millions upon millions that his shares, could be potentially worth? But then it's now come out that he owns a lot of these buildings, and the company WeWork is leasing the space back. And I'm like, oh, that's a little dirty. So double dip there.
So right now, the narrative is something to the tune of, they're using some technology or they're using some kind of metrics to try and improve the workspace to make it a little bit more of efficient, maybe a more communal environment. Yeah. Right. So what happens when the narrative changes? So this is kind of what I want to pivot to next, which is there's been a handful of...
When the truth changes?
When the truth changes and we're only left with the facts. What happens when that story breaks down? And it can happen pretty quickly. It can take a little while. But there's a few areas that I wanted to touch on, some businesses that we saw the narrative change, and just kind of how it related to their market cap and share price. And so the first one that I want to talk to you about, Michael, was 3D printing.
All right.
Remember a few years ago, thinking 2011, 12, 13, as the idea of actually having a business having a 3D printer or an individual having a 3D printer.
Going to be a big deal.
That story was out there a lot, right? We're going to be printing things at home that replicating certain items in the household. And how did that narrative pan out?
Well,
so far,
I don't have a 3D printer in my home, and we're pretty technology forward at my house.
And I think there's some amazing things that they're doing with them, especially around health and medical.
No doubt.
That there could be some lasting major effects.
I think it's still, so early, and it's easy when something's early to get behind the hype train. Like, oh my gosh, this is going to take over and be, but that, like anything else, there's cycles and there's growth phase and there's obstacles along the way, and you just kind of have to, if you're in it, you got to be in it for the long haul. But don't be in it for the wrong reasons.
Right. So that narrative, that story has broken down a little bit and turned, and we've seen some of those market caps really collapse. And then, of course, just here recently, you had one that you came across that you wanted to talk about.
Wait, remind me which one it was.
Tilray.
Oh, Tilray. No, obviously the when the cannabis stocks right now they're huge. There's a lot of hype, and it may have died down, but this company Tilray that came out, I remember seeing it, and it went to the moon. It opened up, and it seemed like almost overnight it was trading over $200 a share, and just as quickly it's now gone back down to around 30. I'm actually pulling up on my phone right now on the app, and it's the CNBC app, and it's trading at right now today it's trading at $30.60 a share. But earlier this year, this thing had gone up to, it peaked out, it looks like, at $214 a share back in October. So not even a full year, October 2018. If you bought this thing at 170, let's just say you bought in around $175 a share, you still had a chance to take profits. But if you held it, and you've literally watched the bottom fall out of this.
Yeah, so
and it was
about a
speculative.
month, sort of hits peak market cap, and then it's just a trail from there.
But again, let's not get our truth confused with facts. So pulling up Tilray on the CNBC app, and you're looking at, okay, earnings per share, negative 1.47. Price to earnings, negative 20.8. Earnings for taxes, the EBITDA earnings, negative 91.96 million. Revenue, 94.52 million. Gross profit margin, 25.24%. Net profit mortgage, net profit margin for trailing 12 months, negative 121.73%.
Yeah,
I mean, it's like, so if you get it pumped up about the story, but then if you look at like what's happening,
right. So
should you be buying that?
So the market's sort of looking for what if any of these stocks in the marijuana field are going to break out. Where's the kind of shining star going to be? And so the story builds. They see it kind of take hold for a little while, but then it breaks down and the narrative turns. And now these stocks trading, $30 a share again.
I think it goes back to one of the age-old tenets about investor behavior, and it still shows you there are plenty of people out there that want the easy money. They want to go to the casino, bet it all on black, and they want that thing to hit. And, once in a while, we see these things where, what was it, a couple years ago with Bitcoin? Just rocketing, and all of a sudden people are at Thanksgiving asking about cryptocurrency. And,
sure.
And then you have, these companies that we've been using on our phones for a while, Uber and Lyft. They have an IPO, WeWork. Mm-hmm. A lot of people have been renting at WeWork. How could this not be, the federal level, there's a big push for the legalization of marijuana. So anytime a cannabis company or company with, cannabis ties comes public, people are piling in because they're thinking, the minute that it's legal, it's just going to go. It just shows you like people are chasing this speculation.
Right.
Like
this
that.
idea that you can sort of build a story and a narrative around a philosophy of the company, but the market's unforgiving. And the moment that is sort of exposed, life comes at you fast. And so you look at a company like WeWork, soon to be, going public here. We'll see what happens with their stock. It's unpredictable, right, as to what's going to happen. Anybody's best guess. But over time, as that narrative grows, when do the facts start to kick in? And when do investors, stock market investors, really start to make a decision beyond just a story? And like I said, sometimes life comes at you fast. It could take a little longer, but you never know.
Well, the one thing that is interesting too is, once they go public, and then they not only have to deal with like presenting their story and their value to the marketplace and wanting people to invest and buy their shares, you also now have to deal with people that are going to short your company. They're going to buy your shares and sell them short and like basically bet against you. And, we've seen some pretty like horrific stories where companies just get buried by short selling pressure, which, drives your price lower, which makes people sell it more. It's crazy the stuff that can happen if you don't have your ducks in a row.
I want to circle back to this concept real quick, just of mismatched liabilities again, and how that can, because this is one of the things that really sticks out if you read the disclosure about WeWork. But I've read similar things across other offerings. But how does that relate to retirement planning? Because I really think about, as we're in the accumulation phase, you may not have those mismatched durations, right? Because you're earning an employment check, you're earning income, you're saving, you're not really relying on your retirement assets to supplement your everyday living expenses. But then that day that you receive your last employment paycheck, and if there is an income gap between what you need to live on versus what you may have coming from Social Security or a pension, do we have mismatched liabilities in the way that we're distributing income? And what's your feeling on that?
Well, I think, the traditional retirement planning philosophy has been around, or at least what has been my experience in seeing, is that a lot of people are building distribution plans using portfolios that do have a degree of market sensitivity. And what do we talk about when we talk about investing? We talk about investing. You thinking long term. Well, when you retire, and you're not really thinking long term about your next paycheck. You're thinking about where's next month's money coming from? This vacation that we're taking in 2 months, where are we going to get that money from? Hey, my car needs to be replaced. Where do I get that money from? So you have your day-to-day living expenses and, unforeseen or unplanned emergencies that could come up. You also have, healthcare expenses that are likely on your own. You have a lot of shorter-term liabilities with a long-term investment portfolio. And so there comes a definite need for planning, and how do we do the distribution planning in such a way where we're not jeopardizing the health of the long-term portfolio by hitting it with constant short-term income needs. And that's one of the things that is really, the math changes a lot, I believe, when you get to planning for retirement versus just trying to save and accumulate wealth, because you do have income needs that now have to be supported by a portfolio, which you've been told all through your working life. Think long-term horizon, buy low, sell high, all of the things you tell yourself when you're trying to accumulate wealth.
Sure. I mean, just think equities over a long period of time, typically generate a better return than fixed income assets like bonds that over a longer period of time are going to probably trail equities because there's generally less risk involved. So you have this sort of mixed ideology that at some point, do we look at creating short-term income distribution accounts, lower risk, maybe matched to the time frame that you want to have them distributed, versus having everything in a long-term growth bucket or growth allocation, because we don't want to end up having mismatched liabilities, right? Where we have a short-term need for income, but we are connected almost exclusively to long-term investments that may have a 10 or 15-year time horizon. But then you turn around on the year that you retire and say, okay, well, now I need to supplement my living expenses a little bit. How do I do that? And what risks am I taking if I continue to do that from a long-term growth portfolio?
Exactly. Well, no one knows what the market situation is going to be like for the next 3 to 5 years after they retire. I mean, if we all could figure that out. I mean, think of how easy retirement planning would be, but there's so many variables that come into it. And that's why, part of the process we use is we look very carefully at asset liability matching, trying to figure out what income we need, where's the best place to provide that income in a safe or in a secure, stable way. We love flexibility because we know that, hey, we've seen it all. I mean, we've seen people that thought they were going to retire but decided to work longer. We've seen people that thought they were going to retire and they get a consulting or a part-time job because they, and so it's about having a plan. And I think that's the key, is not just saying, well, have I saved enough? Because enough is extremely broad and not specific enough when okay, when I retire, the day I walk out of my door, my liabilities and my expenses for what I need to live and then my lifestyle are X.
Right.
How do we get to that?
Can I match my income needs
exactly
to my assets? And so that's really the key. I had one more quick topic.
Sure.
And then we'll see if you had anything left. So I saw this. This is just a 30-second. This is kind of funny to me. So we talk a lot about financial people talking, or we'll always say something along the lines of, cut out the coffee expense, cut this, cut that. And they kind of miss the big picture, right?
The nonsense.
Right. Your living expenses, your healthcare, your transportation, your job. And so I saw this today. So does Kevin O'Leary ever pay $250 for a coffee? Never, says the Shark Tank star. Next paragraph. Oh, he does spend $1,000 a day on food and wine, though.
Wow.
Just, it's just sort of one of those little talk out of both sides of our mouth. It's like they're going to shame you, because you buy a coffee and then turn around and spend,
I personally think you do not need to be getting personal finance advice from billionaires. You know, their day-to-day life is so out of touch from your everyday American that Susie Orman is up there talking to people about not buying lattes, and she I think owns an island. It's like, get out of my face, Susie, with your, I'm going to have my coffee. How about this? Don't have a $700 a month car payment. How about that? So
just thought that was funny.
Oh, I know, absolutely. Do as I say, but not as I do. Right. That's good parenting advice too. Do as I say, not as I do. There's truth over facts right there for you.
There we have it.
But no, I actually, there was something I was going to bring up. There was actually two things that I was going to bring up, and I'll try to do it quickly. But first one is it's kind of more of just a random musing I had about 2 weeks ago. So I came to work about 2 weeks ago, and it was so hot outside. Again, hot as hell's front porch outside. And there was a young man in our business park, and he was walking on the pavement outside. He was dressed in a suit and tie, looked very professional, and I just wondered what he was doing because I have never seen him before. And anyway, I realized he was waiting on somebody. So right where our office is, right beside where he was waiting, and I said, "Hey man, if you want, you're welcome to come just sit in our lobby. We have a nice couch, air conditioned. Whenever you're waiting on, whenever they pull up, you'll see them. You can just hop right out." He was like, "No man, I'm good. I'm just gonna wait right here." And the thought that came to my mind was, some people they don't want any help. They can't be helped because they don't want help.
Okay.
And I don't know why, but I just think I thought about how many folks I talk to on a weekly basis, monthly basis, when they find out, hey, we're in the financial business, that we're financial planners. I need to come talk to you. I want to talk to you. But yet we never hear from those people. And these are people that I know. So it's not like they got to Google us and find us. These are people that have 4 different ways to contact our team. And it's just, it's real easy to, that would be great. And say what we're supposed to say, on a day-to-day basis, that would be great for help. But a lot of people just don't want help. They want to figure it out themselves. They want to, they think they can do it themselves. They don't want to pay somebody to do it. But meanwhile, you've got pro athletes. We've heard the stories about, professional golfers like Tiger Woods having a swing coach. There's a full-on business in the NBA right now with these are guys that are making millions and millions of dollars to play basketball, but they hire shooting coaches.
They're getting help on diet, nutrition, exercise. They know more about exercise than 99.9% of the population, but they're still getting help to get that last sort of percent or two.
And so one of the things that a lot of business coaches will tell you, or just life coaches or whatever guru you want to call someone these days, is find is the thing of modeling, right? What are the top people doing, and do what they do. And I can tell you, the top of the top people, they have advisors and consultants on just about everything. You think Warren Buffett makes, he doesn't make, unilaterally the decisions for Berkshire Hathaway. They've got a team of people that they've put together to help them decide on whether or not they're going to make an investment. Now he gets all the press and the headline, but he doesn't have unilateral control anymore. Anyway, it was just a random thought. And so the other one, real quick, was I saw this article come across LinkedIn the other day, and it made me think of this. It says Americans have a vacation problem.
Ooh.
And it came out. And it said it was earlier this month, but it said August, and for many Europeans, that means taking the entire month off for vacation. And it was really talking about why Americans have a vacation problem, that they don't take the time. A lot of employees won't take their vacation time, or if they do, they take very short vacations and not long vacations. And what got me thinking about that was, I recently went on vacation with the family for 7 days, and I realized it took me probably 2.5 days to actually decompress,
to settle in,
to settle in and really be in vacation mode. because of course I was there. We went to the beach, we went to the beach like the first day we were there, but it literally took me probably 2.5 days before like my mind just started to slow down and like, put the technology away and just really enjoy it and just think about like, if I was going to do like a long weekend, like a 3 or 4 days, I was already over halfway through the vacation and I'd be coming right back.
Right.
So it's just, just a food for thought for, families, obviously a lot of families say they take vacation, they do trips, but I was just going to put that plug in there. It's like, one of the things that we do, we talk about investing, we talk about how to be better with our money, but one of the things we don't talk that much about is why. Of course, there's retirement in the future. There's college in the future for our kids, but there's also like life that happens today. And, take the time to like put together a vacation budget or a plan to like be saving for, a solid vacation where, you're going to put it on the calendar. You've got a goal that you can save towards. And take that vacation. Don't let work, don't let, stuff, if at all possible, don't let anything do that, because man, at the end of that week, like I was so refreshed coming back. I love what I do anyway, but just coming back, I was like, man, we just had the most fun. We had a blast with the kids. The kids loved it.
That's cool.
And, but just being able to be refreshed. And then I come back and saw this article about Americans just not taking their vacation time. Is so
not embracing it.
Yeah. So
gotta soak it up. What are we doing? We're building all this vacation time, and it rolls over, and then we ended up taking
how
his income.
How many folks do we know like they get ready to cash in their vacation days because they can be paid for them. Well, you didn't use them, so we can cash them in. Use those suckers, man.
Yeah. I know. I saw. I don't have the source in front of me, but I thought it was a Fidelity related article where they were allowing or some kind of partnership with some of the payroll companies to use built up vacation days to help pay off student loans. I'm like, oh my God, like that sounds, I know I understand the pressing need to have those, those liabilities paid,
right.
But man, just think it's the opposite of what you just said, which is now we're not getting the relief. We're not getting the decompress, and then we're actually using it to pay a bill.
I just think about how much, and I don't have any reports to cite, but I think of, we're constantly hearing in one way, shape, or form in the news about people being over medicated on anxiety meds. And I'm not saying that vacation's a cure all, but just, like stress accumulates. It accumulates over time.
Right.
And
it's a compounding effect. And like everything, it takes a little while to show.
And just having something to look forward to that's legitimately like you're going to get away, with your family or someone, someone you care about, and just have time away where it's just, you're just doing life and enjoying life, and it's not, you're not worried about stuff. You don't have the technology with you. I think that's a very noble thing to be doing, because at the end of the day, you don't get to take your stuff with you. But, if you're fortunate enough to live a long life, hopefully you have a lifetime of memories with your loved ones. And that's what your kids, that's what your family's going to remember, are those times together, those trips.
Hey, I found that article. So it was Unum, Student Loan Debt Solution, letting employees trade in vacation time. So this was through benefitnews.com. Go on vacation or pay off that student loan?
Right.
Question mark. It's like, oof.
Yeah.
That's not a choice I want people to have to make, which is maintaining, the ability to pay bills or actually go on a little vacation.
Right. Well, just think about it. Like, would you rather have, if you're an employer, would you rather have your people working in your offices miserable, stressed out, grumpy, and cranky? I would rather it be because they got a student loan, not because they don't go on vacation.
Right.
Anyway, well, as always, thank you for tuning in and listening. You can find us on our Facebook page. We are on Facebook, The Money Huddle. You can email us questions, themoneyhuddle@vcplanning.com. And as always, we will talk to you next time.